My next guest just rewrote his latest note because of what has transpired in the past 24 hours and says this is the most investable election of his professional career. Joining us is Dan Clifton, head of policy research at Strategas, a Baird company. Dan, where do you want to pick up?
Well, great. I would just start off by saying, the odds of a Republican win have gone up here. And if they replace Biden with Kamala Harris, Trump will still be the favorite. He'll have slightly lower odds until you can see how that begins to play itself out. But now, because of all this news flow, with the assassination attempt, with Biden's debate, you're now starting to see investors really start to plug in and try and understand the investable impacts of this election. And for us, it's less about the broader indexes, and it's about trying to identify companies that are going to get a significant earnings benefit if one candidate wins over another, or one candidate or one party has control of a complete sweep in Congress. And you're starting to see those play out. And what I would argue, Kelly, is that there's four major areas right now that investors need to be focused on. You saw it last night with J.D. Vance, but the tariff trade is probably the largest impact. And what we like to say is that this is a referendum on the speed at which the U.S. will deglobalize, with Trump deglobalizing us faster than, say, Biden will. The second is deregulation. The third is just generally what can happen if you get a Republican or Democratic sweep. Those are our Biden-Trump portfolios. And then fourth is what happens on a sector basis. But what is so fascinating about this election is that up until this point, this election has impacted non-U.S. stock markets like China, India, and Mexico more than it has impacted U.S. Stock market. Now you're going to see that broaden itself out as we start to think about what can happen over the next 4 or 5 months.
That's a really interesting point. I like how you tell us all to watch FedEx, that stock has been a good proxy for globalization. The way it trades relative to the S&P is one of the most correlated to the election probabilities. Big picture, I mean, do you think the market's selling off today because somehow Trump's odds are now lessened and maybe Harris would be a better contender, and who knows who her vice presidential pick could be? I mean, should we read into that, do you think?
Well, I just think that there's less certainty about what could happen. I wouldn't read into the broader market decline because of what's happening in the election itself. You obviously had a big news event yesterday morning where Biden is talking about regulating the semi-space. We know that Trump is going to regulate the semi-space, and Trump then said that he was thinking about, that Taiwan needs to defend itself. So there's a lot of uncertainty in an area that was getting a bit frothy in the market, and I think that there's some rotation that's going to be associated with that. You're also getting really powerful disinflationary data that's starting to come through, and it looks like more likely that the Fed is going to be cutting rates. And then over the last couple of days, we've just had a little bit of a liquidity drain, and that liquidity drain tends to tighten financial conditions. We tend to think that's temporary itself. And again, I would focus on the sectors that matter. And what we saw, and what we've really seen since June 27th, and again over the last week or so, is that the stocks that are levered up to Trump or would be hurt by Trump, they have really significantly moved. And the one that I would point out are the stocks that benefit from deregulation, immigration, for-profit education. Those stocks are up 14% in the last 3 weeks. Wow. The S&P, by contrast, is up 1.5%. So you're really starting to see investors begin to pick their spots for the election. And I think that's the right angle to take rather than the broader indexes.
And again, just so people caught that education is one area where deregulation could really give them those stocks a fill. We talked yesterday about Adtalem. It's a name we've had on the show before. It does nursing, education, and so forth. A couple of others, you say financials remain the greatest beneficiary of a Republican win. Industrials could struggle. Defense as well could be viewed as less positive under Trump. On the tariff front, it's a little bit mixed, but healthcare, this is one area where you think if it is Harris instead of Biden, that we could see a real difference there, maybe with the rise of Medicare for all, for instance.
Absolutely. There's not much difference between Biden and Harris on most issues, but she was much more aggressive on Medicare for all during her campaign. Now, you can argue that she was running in a Democratic primary, but healthcare, which is usually one of the most involved sectors for an election, has been on the sidelines. It's very pick your spots, Medicare Advantage, Medicaid, a little bit on drug pricing, but not much. And I think if she does enter the race, you'll start to see more attention be focused on that Medicare for all trade, and that a higher probability of a Republican win would probably help some of the managed care and pharma stocks, all else being equal. And I say that knowing that Trump is not good on drug pricing. He's just as bad on it as Biden is. But that Medicare for all trade was a big, big weight on the market in 2020, and you would start to see that come back. There are other areas, smaller areas like cannabis, where she's a little bit more forceful than Biden would be on the issue. But overall, a lot of their policy issues are the same, and so that would be probably where the biggest change comes in.
Some have